Okay, hello traders. Welcome to this live intraday strategy webinar. Today is Tuesday, November 20th. Michael Boutros here with you this morning. Kelly, good morning, brother. Short dollar CAD 131.85 scalping. Yeah, we'll have that on the schedule for sure on dollar CAD. Be careful on the short side here. We'll take a look at some things in a couple of minutes here, Kelly. Iman, good morning to you as well. Jaya, Mohammed, Peter, we got the whole crew here. So on the list for today, DXY coming into the area of support. If you noted yesterday, I was telling you that we were easing up on those dollar shorts just on account of where the DXY was trading. Well warranted. You are getting a little bit of a rebound here in the DXY. Risk is selling off pretty abruptly, continually. So you saw Asia sell off last night. Equity futures are looking lower as well. So we'll take a look at DXY, Euro, Aussie, and Kiwi, and CAD from the Sunday update. And then we'll hit the update from last night. So I went a little crazy on the yen crosses, Aussie yen, Kiwi yen, all looking really interesting. We looked at the broader picture for Euro Key, which also is at a big support zone as well. So we'll take a look at those as well. As always, any questions or trade setups you guys want to look at, feel free to post them on the message board. All right, so here's the update from Sunday and the DXY. The basic premise of this, you all know we've been looking at that longer term slope on the weekly chart. Here's your first area of major support. Okay, you have the 200-week moving average. On the weekly chart, you still have a little bit more room before you test that channel support. But here's the daily. Okay, 38.2, basic stretch of the advance. Basic trend line with 3 points confirmed, also converging right here. Oh, it's right here on the chart on the right. So, an area to be definitely mindful of a possibility for a little bit of recovery. It's what we were talking about last night. Don't expect this to get too aggressive on the upside, but definitely still looking, for a little bit of recovery here to give us a better entry. Can we have a look at gold, please? I'm not in any position, but I would like your amazing daily update. You got it, yeah. Did I not say gold? Well, we got to add that on for sure. Yeah. Nice breakout, right? We're not, well, I shouldn't say breakout. It's a near-term breakout, but we haven't actually marked resumption yet. So we'll go back to that. Before the DXY, here's what we looked at the start of the week. Really nice pivot at 96.45, 96.44. Again, my favorite Fibonacci confluences. That was 100% extension, a 618 retracement. You saw the pivot below that take us right back into that lower target, 96.15, 96.22. Okay, you did see price sneak a little bit below that intraday, but certainly the same type of price action that you're seeing on the euro as well. So here's that drop into that support. This is the level that needs to give out to mark resumption lower. This is uptrend support, remember, from the October lows. So you're at a pretty nice level here. Oh, excuse me, from the late October low. So this formation still, you got to give it some respect. You got a 38.2, 764, nice little support zone there held outside reversal candle. Could see a little bit more of a swing higher. So initially on this stretch, by the way, at this point, I'm going to remove this pitchfork just to keep the chart clean so you guys can see this better. At this point, this is still going to be a pivot I'm watching. If we make it through, there is a risk for a tag of that parallel or even 96.75, but I really want to see failure in this zone for DXY. Okay, this is a pretty big support. We want to see it eventually break. Near term could get a little bit of a rebound, but largely looking for exhaustion below that parallel if this is going to work. Okay, this could just be a serious support bounce and resumption. Not our favorite scenario, but certainly at this point, you still have to respect 96.22. 96.15 is that lower end of support. Also, if we do make it through 96.46, something you want to look at just for near-term price. At this point, I'm actually pretty comfortable moving that there. Moving that there. Okay, both those pivot points are actually better. All right, quick rework for the levels on the DXY, guys. In light of the new reversal bounce that we got here, Immediate resistance, still look at 96.46, 96.45, this spot right here, but this is going to be, right past the weekly opening range highs. So 96.67. Looking for failure ahead of this, ideally. Questions on DXY? No, you didn't mention. Okay, man, we'll definitely take a look at gold. I got you. Okay, so the dollar recovery that we were getting concerned about last night is starting to materialize here. Nice support bound. Looks, we have a really nice drop, guys. Had over a 2% drop. So no surprise here to see a little bit of a rebound. Here's euro. And here's what euro looked like earlier in the week. So for this thing is a very similar scenario. Start the week, we saw a little bit more room for a dollar decline, a little bit more room for the euro rally before the reversal, or at least a near-term pullback. And the threat was really this zone here. It's almost the identical DXY setup inverse. Basic 38.2 of the decline from the September high. You had those former swing lows from October. 114.32, 114.49. You can see we made it just through that. Here's what the scalp looked like into the Sunday open. So we were looking for a possible failure into 14.50, 14.49, 14.45. You saw this thing push a little bit through. That upper parallel held. Okay? And then we got, again, outside reversal candle last night. Leave a little bit more room for a decline here. The first level that we noted on this on the Sunday update was right here. I think I put 1380, if I'm not mistaken, 1375. So you want to shift that a little bit more to account for time. It moves up a little bit, like 1390s at this point, that former slope. First area of interest, bullish invalidation, still is down at 1320 at this point for the broader trend. Ideally, if we're going to hold, again, this is an area of interest. It's your opening range low for the week. 1390s. Kind of want to see this thing start to hold. Remember, remember one thing. Basic channel resistance. This is a break. You kind of want to see this thing start to offer some support here on this pullback. If it doesn't and it breaks below that slope, look for the August low day close again. It takes you right back to 1345. Now, risk is pretty aggressive right now. Again, I want to just bring your attention to the SPX. I guess I should show you on the weekly chart. SPX, there it is. Okay, this thing is falling through bed again. 2018 open, 618 retracement. We talked about 687. This zone right here, pretty important. We haven't yet to close below. Let's see what happens here today. See what happens here today. It hit your target at 1470 today. It was your yesterday's article at Daily Effects. You're talking about euro. Man. Yeah, it did, didn't it? Yeah, so that was yeah, sometimes better to be lucky than skillful on that one, man. But yeah, it did offer some resistance along that trend line. So I'm looking for a reset. I think it gets a little bit deeper than here for the pullback, but no change. Remember on the weekly charts, this thing posted a reversal candle off of big support, big inflection range, 200-week moving average. Even if you take the extension or the sort of extremes on the intro week, basic trend line resistance, 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 support, a little poke through, but a nice reversal candle off it. So yeah, on Daily Effects, I did put up that weekly chart, and this is what basically is driving things in my eyes. Resistance, resistance, pivot break acceleration. Didn't close below it. We did close below it, so that's now resistance. We need to get through that at 1470 to get the fuel to go up. Yeah, that's what I was talking about on the weekly charts. I haven't put the scalp on Daily Effects, but maybe we'll do that this week at some point to give them a taste. But this is the first area, so not surprised you'll see a little bit of a pullback. Ultimately, while above this region 113, we still need to look higher. Big support, mark divergence into it. If you're going to get kicked back, this would be the first spot, but I would still be looking to buy a deeper pullback. So as I told you guys in the webinar, I got out along in this zone. So I didn't get to take advantage of that last stretch into 1470. Would have been nice, but this is a pretty big inflection here. Caught many lows, highs, sail through on both sides. Maybe get a little bit deeper here towards 1390s. Any questions on euro dollar? So again, the swing side of things, we're on break even on that side already. If you're looking for a scalp or you're looking for something near term, wouldn't try to short this beyond here. Also short euro. Oh, E-Man, I missed that question. Scalping from 1458. Nice entry. Very nice entry. Okay, E-Man, so watch this. Let me, now that we have, again, that big old reversal, 4-hour reversal bar, let me just see what a near-term retracement of the advance looks like. Any interesting levels come up, and boy, does it. 618 comes in right in line with that major critical 1320, 1313 level. I'm sorry, 1313, yeah, 1320 level. I'm going to just remove that 618 because it's getting a little confusing. It's a November open as well. And then the 50% converges right on the August low day close. The levels are really clean. So E-Man, on that trade, this would be, let me take a step back. Right here, if this is a simple breach test of support, this would be the support level that you'd hold. So I would kind of have a limit at break even on that trade as of now, because if this does reverse, it's probably going to rip higher. Not my favorite scenario. I think you still get a drive lower, but just watch it. First level will be the weekly opening range. Like I said, 1390s or so is that slope. Then 1374. If you get down there, if you want to leave a little bit for an extension to 1343, I wouldn't press it too aggressively. That's the August low day close. It's a 50% retracement of the advance. Obviously, a pretty decent pivot in price in and of itself. But those levels I'd be looking at. First 1390 and 1374 on the downside. If you get 1374, by the way, I'd have my stops way in the money. I wouldn't go break even on the rest because that's the objective weekly opening range low, man. Make sense? Marco says, is 1350 too much of a stretch? Oh, sorry, 1370. No, I wouldn't say 1370 is too far of a stretch. But again, objective stuff, Marco, right? I don't want to put my opinion on it. That's, right below the opening range low for the week. So my point being is if you get that break, Marco, 1370 is not a stretch at all. But ahead of that, you'd need to see this. This could come right into the weekly opening range and hold. I don't know. So if you're holding a short, a good area to, again, bring your stops in. If not, take a little off the trade. But if we get that break below the weekly open, below the weekly opening range lows, yeah. At that point, you look for that spill towards, even 1345 on a move lower. He says, trying to get back long. Right. So that's what I'm trying to do. On a long trade, this is the first spot I'm looking. Ideally 1375 for that basic 38.2, 4 more swing highs there. We'll have to assess price action as we get down there. Early in the week on the pullback, I wanted to see that sort of entry near that slope, Marco, but you never got it. So I don't want to stress this slope at this point. It is a 3-point touch. It's an area that lines up with the weekly opening range, but both of these would be, stronger entries for a decent long position. You've got to see some conviction on this turn, though. Even in near-term price, there's just nothing yet. You're about to break into oversold territory for the first time in the week. Last time we did that, it's a pretty deep spill still. So I don't want to be trying to buy this just yet. We need to see near-term price action give us something. Okay? Yes, to the maximum, Michael. Thank you. Already closed out half my position at 114.11. There you go, man. We'll watch the rest after giving me more light to these levels. You're more than welcome, man. Marco, cheers. So I'm on the lookout for an entry here to get back on that one. Swing side of trades, obviously, we moved up the stop on Jamie's side, put it 1320. Average entry, the entry was 1305, so you're locked in profit there. I wouldn't change those levels at all unless unless something changes. But for now, for re-entries, let's see if we can't get a deeper cut first. All right, that is euro. Next up, Aussie dollar. So very similar scenario into the start of the week. We talked about the fact that we're basically extending into a near-term resistance zone. We stretched into it on Friday. We gapped lower to the open, but the threat was still for a near-term pullback here. Now for Aussie, we're right here. Okay, I was on a trigger here all morning trying to look for near-term price action to get the buy. Dollar seems to be making a little bit more of a stretch higher, so I didn't want to fight it yet. But man, I would like to see these lower parallels hold for us to continue liking the favored breakout in Aussie. Here's what it looks like now. Okay, there's that level. That's just the basic 200-day moving average. Here's the daily chart. See that? We're sitting on that. Second time now. Okay. 73.36, 73.23. You guys know we've been talking about that level literally for almost a year now. Big region. We failed into it last week. We talked about it yesterday in the webinar on the pullback. This is the range that we're looking for the break. Some divergence here into the high, and again, with the dollar making that little mount, I just don't have conviction to try to fight this yet. It's just not there. So look, ideally, you get a hold at these lows into the U.S. Open. Any long that you take, just have it against that Thursday, Friday low from last week, which would be below this parallel. Ultimately, you still need to see a crack above 73.36, 73.28. It's a big region. Okay, and that would open up the more significant resistance target up here at the May loaded close. So it's, near term, it's make or break here. If we break this level on the 100-day moving average, those former swing lows, I would expect to see a deeper correction to the downside. Again, not my favorite scenario, and ultimately I would look to buy that too. But right now, this is kind of a make it or break it level for me. I do want to see this hold. So no change for those Sunday update. There's the slide right into the open, right into that support level. Let's see if this holds. Ultimately, we're looking for 74.55, 74.46 on the upside. 72.35 is too much of a stretch. 72.35. What do you have there, Marco? Do you have a level at 72.35? So you do? Okay. I have a level at 72.20. That was last week's open, but you can see the inflection in price, which is why I kind of left it here this week. But on this pullback, this is the retracement of the advance. Let's just see if the 38.2 comes in anywhere interesting. Oh, look at that. 38.2 comes in right on last week's open. So something I'm watching irrespective, right? 50 doesn't really line up with anything, so I don't want to stress that level for no reason. Let's keep the chart pretty tidy here, but that 38.2 stretch from the advance off the October low converges right on last week's open. If we break, that's a stretch target. But yeah, it's kind of testing uptrend support here. So if it doesn't hold here, I think you get a deeper pullback. I'll probably end up taking a long position to the open of US trade just against those lows, see how it pans out. But there hasn't been a signal in near-term price just yet. Yeah, not yet. Okay, we'll see how this pans out to the US Open. All right, that is Aussie. Number 4 will be New Zealand dollar. So New Zealand dollar still outpacing Aussie Kiwi. Aussie dollar, which is interesting because Aussie Kiwi tested a break at that big level that I highlighted in yesterday's webinar. Here's Kiwi dollar, first of all. So let's go back to the updates. We did that last night. Here it was. So early in the week, we were looking at this, or later last week, we were looking at this. And if you guys remember, the focus was sort of to look for a stretch into this region. Failure ahead of the May low was what we were looking for. Obviously, really, really clean uptrend. You saw that breach literally almost go up and kiss that 200-day moving average. We turned right ahead of it on Friday. So basically to start this week, the focus is still, the risk for a washout below the 68.62 level, or basically that's the weekly open, which is what I put here, right here, 68.62. We came into it last night, even overshot it a little bit, 68.70. If this is going to turn lower, this is what needs to hold right now. So if you're looking for a position that I'm instantly looking for into the US Open, this is it. A break and a basic 236, nothing even fancy, takes you into that major pivot slope at 67.75. So for me, it was just worth it to try to be in this one, at least to see that last downside stretch. I loved that the weekly open held resistance last night. But be mindful of this. The Aussie correction has been cleaner. I feel like I'm trying to hold a balloon underwater with this trade because, again, even if you look at relative performance for Aussie Kiwi, that level that was really big last night, we kind of probed through and came back. Point being, Kiwi strength is still outpacing Aussie strength. And on the way down, Aussie weakness is still outweighing Kiwi weakness. So pick and choose your battles better. If you're trying to short, the better play, in my opinion, to play the long dollar position was short Aussie. Kiwi, you kind of want to look to reset in the long side again. But near term, I thought it was worth a shot. So, initially I'm only looking for a dip, towards the lows here. Basic 38.2, like I said, or basic 236 is 67.75. But all things held constant, I'll show you what I was looking at this morning. Again, I have no way of identifying that this is a major high in price yet, but just to help me identify some targets in price, look where that 100 comes in, right below that 68.11 level. So again, this is where I'll take some of the trade off, clean up, go stop, break even or better. 67.75 probably wouldn't get any deeper than that. I'd probably be looking to book the rest of it down there if we get it. But at this point, just know that, Kiwi's coming off some big resistance. It looks to me like a basic, simple false break of major channel resistance. Okay, former swing lows, former swing lows, former swing highs, former swing highs. Yeah, we probed through it, but here's the mean reversal trade sort of pullback. Ultimately, this is still constructive above 67. So even if we get a deep, deep, deep pullback, that's just going to give us a better opportunity to get long, in my opinion. But right now, I don't want to get long at the highs, right? At the highs. So that's kind of the thought process for Kiwi. That's where I've been on this one. Any questions? Any questions on this? No change to any of the levels from last night. The only thing here, I'm sorry, I took the picture before I finished updating my levels, obviously. I do have 68.51 as a level still on there, but just highlight the weekly open. I put it in the report. I just didn't highlight it on the chart. So 68.62 weekly open. Still in like near-term resistance that we're looking for. Now, if this fizzles out and we fail ahead of this low and I don't get my first limit at 68.11, I'll bring the stop to break even. If we rip through this, like I said, we're probably going to see resumption. There's a lot of room to the upside in Kiwi. Remember, we've broken yearly downtrend resistance here. So the short that I'm in is just off the premise of this channel resistance, maybe some kickback. Ultimately, this is still sort of a breakout trade. So just be mindful of that. All right, that's Kiwi dollar. Going once, going twice, sold. Loonie. Here's dollar CAD. So on this one, here's what dollar CAD looked like earlier in the week. That was on the Sunday update, right here. So we talked about this on Sunday, and basically, we just wanted to note that we were opening at the pivot zone to start the week, 130, 130, 130, 31.50. I know you guys have heard me talk about this level for weeks and weeks and weeks. It's still, unfortunately, the main inflection zone for price. It's offered resistance from beneath. It's offered support from above to start off the week. That same zone converged on basic trendline support, extending off the October lows. One touch, two touch, three touch confirms that region. Okay, so the risk was for a rebound. Ultimately, to start off the week, I was kind of looking for a short off of 31.86 or even 32.11. If you took 31.86 last night on this exhaustion because you thought there was a pullback, I would have actually taken it. I was kicking myself that I didn't. It came right into 31.55, literally. The low registered at 31.55.4, literally. And then here's the rip. So this is the 618 retracement. You know, I have bearish invalidation at 32.40. So if it gets through that, guys, we have to look resumption. The upper parallel, the high day close, 33.40. Not my favorite scenario. Again, I still think you get a little bit more of a kickback here, but if you're gonna play, you know, a dollar short position, this is gonna be one that I'm gonna be too hard pressed to get into. So looking for failure. If you played the rebound, anyone here holding longs? I don't know if anyone's holding long on dollar CAD, but if you're playing the rebound, this is a good area to start to book profit. The high day close for the year. I just don't know if you get up there. Oh, excuse me. This is this month's high day close. The high day close for the year comes up, you know, way up here at 33.40. So that's sort of the breakout risk if we mount that rally through here. In fact, let me just see what this looks like. Might be a stretch, but if it's gonna exhaust, it'd be at one of these two levels early in the session today. Any dollar CAD data? Nope, nothing until tomorrow. You get retail sales and CPI data tomorrow. I'm sorry, on the 23rd. So I guess on Friday. From Canada. Okay, so yeah, watch this region here, guys, right into the US Open. 32.11 is going to be that 618 of the near-term drop. Just higher, 32.30 would be the 100% extension. So if this is corrective, you know, that's the level I think you'd want to see hold. Oops. Strange pair. It's the only one showing US dollar bullishness in the long term. Yeah, Marco. I wouldn't say it's the only one showing dollar bullishness in the long term, but certainly for dollar CAD on the weekly chart, this was kind of big, man. This is the issue. When we broke that slope, this is, again, a parallel of the same operative slope we've been working with off that 2016 highs. If this was legit, you know, you want to see acceleration here. So last week's failure and pullback still held the high week close as support. So yeah, if this pushes through, man, there's certainly problems here for dollar CAD. So I'm not going to sit there and fight this one again. Just know that near term, these are levels of which I'm looking for failure if this is going to move lower. So no change to the dollar CAD levels from earlier in the week. The only thing I add is that 100% extension. Let's see if that gives us a hold. Ideally, you get failure at one of these levels. Okay, questions on Loonie? That is number 5. Number 6, last night's updates. Let's jump into those. Those were fun. Oh, actually, let me hit gold for you real quick. Who wanted gold? Was that you, Iman? Here's gold. So, okay, so you got the top side break. of the formation. This is your first like sort of major test beyond that. So I'll take this out again. Where's the gold update? Was on Sunday, I believe. Right here. So here's the intraday chart, right? If we were going to get some sort of pullback start off the week, this was the level. We want to stay constructive above 1214, bullish inval at 1210. You didn't even get that pullback before breaking that parallel, coming back, almost checking it as support. Here's that first region of resistance. There's that trend line. This is basic trend line resistance off the highs from October. Nothing fancy. That's what we just checked as resistance on building divergence. So, Iman, I'm not in any position, but like, okay. So yeah, for gold, if you're not long, this is not the place to press new longs. Okay. Again, very basic trendline resistance. Here's the daily chart for gold. Super, super basic. Okay. So if you're going to get some sort of corrective pullback, by the way, this is going to complete the 6 consecutive days of day of advance. Let's see the last time we've seen that. Well, that was 8 days up, 1 day reversal. This was 6 days up. That was a decent high. 6 days up, 1 day pause. Okay, so there's nothing significant with that count of how many days in a row we've had advances, but resistance to resistance, support is support. So look, on a day to close basis, we still haven't cleared that 618. On an intraday basis, we're still holding that slope. Again, I'm of the mindset that especially if the dollar strength kind of gathers pace a little bit near term before we continue to resume, it could give this thing a little bit of a setback. End of the day, long story short, you're still constructive above 1213, 1214, 1215 rather. The monthly open is right there. 200-day moving average is just below it. Huge pivot in price, huge pivot in price. So I'm still constructive above this region. Once this gives out, what's the main level? You guys all know it. 1236, 1238. Still the same zone. Okay, so how do we get into this again for the long side if you want to take a re-entry on the position? I'm going to go ahead and scratch this at this point. This retracement gets taken to the new high. Actually, it's really close to the weekly open. So, all right, don't stress the 236, but here's the weekly open for gold right here, 1221. So the 236 comes in at 1220. That's near-term support. Obviously, we broke through it early in the week, but you could see even intra-week, there's some really decent pivot action right on that, right? Both sides, both sides, both sides. So look, ultimately, I do think this pulls back. You're still marking divergence on every one of these presses higher. If we breach this region, I think we noted 1229 on the report. Yes, if we breach this region, 1229, then you look for a larger rally into that key zone. Again, near term, with the dollar doing what it's doing, wouldn't be surprised to see a little bit of a setback. 1220, 1215, 1214, both areas of interest for re-entry. I'd use this as my near-term bullish inval. This has been really, really, really nice reversal here in gold. It's just on the back of a 6-day rally. Could get a day interruption or so. You're at slope resistance. Look for the setback constructive above 1214. Here's gold on the weekly charts. Still right in the middle of that range. Okay, that's number 7. You're more than welcome, man. Okay, so last night's update. So you guys know how I feel about the yen. I typically don't go nuts on it, but last night there was just a lot to look at. Kiwi yen, Aussie yen, just really, really big areas that we were looking at. So really quick, here's what we looked at last night. Kiwi yen, the focus here was on the stretch higher, both from the weekly standpoint and the daily standpoint. You know, again, we haven't looked at Kiwi yen literally. I looked back in the archives. Last time I updated this was like in March. So I didn't even link back to it. But here's what the long-term picture looks like for Kiwi yen. I know it's a pair that's a little bit more on the exotic side, but you know, the levels were pretty clean. 78 to 50% retracement of the decline from last year's high. And just ahead of that is basic slope resistance. So parallel of this, extending off the low that we made back in November, pretty much caught the lows this year. Basic 786 of the advance off the 2016 lows, basic caught the lows on a swing, even intra-week basis. Here's the stretch higher. This is the first area to look. Okay, so I'm sorry about that, guys. Bear with me one moment. I'm sorry about that. It's a problem when you have too many Apple products. They all go off and start ringing at the same time. So the weekly chart was pretty clear here. Running back to the daily chart in Kiwi Yen, that one was pretty clean too. Here's what it looked like. Okay, so you had basic slope resistance off the highs. The 618 of this pitchfork that we've been following from the lows on building divergence, price action with a higher high into nestled resistance or confluence resistance, momentum with divergence. Here's the pullback. So the threat here was a little bit of a pullback play in the longer term. Okay, just for the first major pivot would be 76.40, not so much because of the 236, but because of the median line, specifically because the parallels did hold. We've shown some respect here. So that'd be the first area up for support or major considered support on the pullback. So you got this thing moving a little lower, but it hasn't really gotten much as far as momentum. Here it is on the 240-minute chart. Here's what it looks like now. Okay, so I still do like it lower, and remember the lower call here is also kind of in line with what we're looking at for yen strength, and I noted that in the update last night as well. Jamie highlighted dollar yen, so I didn't want to kind of double up and put all our yen exposure on just the dollar, but looking across the board, Aussie into resistance with some yen strength might be a decent pullback. Kiwi into some resistance with some yen strength might be a decent pullback. Obviously, on these two, Aussie yen is the one that played out better last night because, like I said, the Aussie weakness story, or even on the upside, the Aussie strength story just doesn't have the kind of push that Kiwi's been having. So on this one, really light on the downside. I don't have any exposure on this, just for as a disclosure here, but you know the target is still going to be towards that median line, towards that basic 236 retracement. Okay, so Kiwi yen, I know it's an odd pair, but just coming off of a really clean level of technical resistance on divergence, yeah, I still think you get a little bit of a pullback here. Okay, ultimately, I hope this is corrective and we look for a larger position for an entry on the long side. But as stands right now, not only is it just near-term uptrend support, it is multi-year downtrend. Uptrend resistance. It's multi-year downtrend resistance from 2017, 2018 highs. Okay, so let's see if we can't get some further yen strength here. That is Kiwi yen, number 6, 7. Okay, Aussie yen. Here's number 8. So Aussie yen looks pretty good too. Here's the Aussie yen trade. as it stands now. And here's what it looked like last night. Again, on this one, very similar setup. Okay, we had been looking at this last week. If you got to go to the previous update here, and the focus was on the daily chart. Very similar scenario to what we were seeing in Kiwi, but this one didn't give us two highs into divergence like the Kiwi did versus yen, right? This one made a spike high earlier in the month and we just ripped lower. Looks like near-term consolidation to me. Lower highs, looks like a former higher lows. So, you know, this one hasn't necessarily given us the downside break yet, but I do still think you look lower. Ultimately, sort of 81.30s, that 100-day moving average, the 50 line looks like a decent target on this one. Here's what the scalp looked like last night. Here's what it looks like now. Okay. So if we're going to get some sort of corrective bounce, or if we were going to get worried that this thing was going to rip higher, that would have been the part to hold. And that was the target that we talked about earlier in the week on a downside break. So we got that last night. We bounced a little bit. Here's the break lower. Obviously, as we noted, sub 81.79. You're looking lower. Expose the next downside target at 81.22/33. That's right here. And you have the 50 line here. So again, an area of which you want to start to hold. You want to start to clean up any short exposure you have. This is a 38.2 retracement of the entire advance from the October lows, which again, that's the lows for the year. And then you have a basic 100% extension. So if this is corrective, two equal legs down, sort of that would be the area of which you'd start to expect a little bit more firmer support. All right. Some interesting trades on the yen crosses, I know, but they still actually look pretty clean. The question is, can we get continued yen strength? And again, I'm not personally trading dollar yen, guys. I'm not really involved in any dollar yen trading at this point. You know, when it was clean a couple of weeks ago, I was all over it. And Jamie seems to have a better grasp on this than I do. But for dollar yen, my issue, okay, is finding entries. We haven't gotten any type of decent recoveries. It's been tough to try to get short at the lows. So if you feel like you're getting FOMO here, you're missing out on dollar yen. I understand I feel you, but there's just nothing here for me to try to get into. Look, this is on the back of like a 4th-day consecutive decline. If you count that doji, it's almost 6. You haven't gotten anything pull. I mean, just basic trendline support still converges on the 100-day moving average, still at 112. So how do I try to jump into this? I'm not going to get caught chasing. Okay, I'm not going to get caught chasing. If you're holding shorts from anything northbound of 1327, okay, I would have a stop at 13. That would necessitate a break back above monthly open, which is 1291, 1292. And look for that drop into this key zone, the 112 handle. This moving average has been a very clear pivot in price. Break, acceleration, support, 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 converges on basic trendline support. Just lower at 112. Marco says, never get FOMO with the abomination, right? Yes, that's a quick way to make a mess of things. Absolutely agree with that one. And although I like the short side, picking the direction is only 50% of the game, right, guys? We have to have a proper setup, a proper risk-reward ratio, proper entries, and none of that has been revealed, in my humble opinion, for dollar yen. So look, the formation is not all that ugly. Okay, it's not all that ugly. The slope that we were looking at last week, support, broke, offered resistance. Here's the move lower. So cool, we are looking lower. The decline seems to be holding this slope, but still, that was your only possibility for an entry yesterday, and I wasn't going to take it, right? Again, we're at the fresh monthly lows. I can't sell into the lows. I just can't do it. So, put a pistol to my head. I say that this thing probably recovers a little bit today. Maybe check yearly open resistance, maybe the median line right here. If you get some sort of failure, a decent signal there, you have to have stops still against 1288. So it's almost a 30 pip stop, 20 pip stop still. But that'd be the only thing I'd be looking to do here. If we get back towards the median line, we risk 13.27 again. I'm not going to sit and trade upside down that long. But just know that dollar yen it's tricky here. It's tricky here. Questions on the abomination, also known as dollar yen. By the way, on the intraday chart, again, your big supports, beyond here is still going to be like 112, 112.04. So you have the 786 retracement of the advance off the October lows. But then again, the 100-day moving average that we just looked at on the daily charts. So this is your next sort of big support zone if we break below this parallel. As it stands right now, you're showing divergence into these lows. So, I can't jump into a short here. If anything, pistol to your head, probably going to take a long against that low if you start to move back above 1250. But there's not much room, guys. The yearly open resistance is still going to be a pivot at 1265. That's right here. It's where we opened this year. All right. Eman says, for me, no. Yeah, it's kind of my stance on this thing as well. I just can't encourage chasing. It's a funny thing I say that because someone on Daily Effects literally yesterday wrote it's worth chasing, and it's kind of like a cardinal sin. So nothing I'll advocate for here. All right, that's dollar yen. We looked at dollar yen, Aussie yen, Kiwi yen. The last thing I updated last night, 9 is gonna be 10. There's no update. There's no setup here yet. Okay, but I wanted to have you guys looking at it because it's such a big support zone. Euro Kiwi. Another one, which again would favor essentially Kiwi weakness. We haven't gotten it. As I said yesterday, there's no trade here yet, but certainly the level of which we turned was so important. The yearly lows, the yearly low day close, all registered in January. That was the response in June. Here's the response in November. Add to that basic downslope resistance, a parallel, converged on that same spot. So yeah, it was worth looking for a rebound. I didn't take it. The question is, how do we respond here? If this pullback holds and fails against this low, you have to look for a rally back near 69. And that's kind of what I'm set to look for at this point. So here again, Euro Kiwi looks like this. There's nothing really on the intraday chart, and there wasn't much structure to the advance either, which is what I was noting yesterday. But here's what we want to see. Okay. If this does move, or if this is still going to move higher, I want to see support basically ahead of basically like the low day close, right? Low day close 65.90. So that's the level that would be needed to fill this gap. So you see the Sunday open gap that we moved higher. It's a really small gap. Markets don't always fill a gap. It's not necessary. But certainly at this point, that's my near-term bullish inval. So I think you get a little bit more of a bounce here, just off the critical nature of this support zone, downslope support, yearly lows, low day close. I think it's worth a little bit more of a slingshot back towards 69. Just make sure any entries that you take, your stop needs to be against, at least the low day close, ideally against the swing low, if this is going to work. Again, like I said, Kiwi weakness just hasn't been the play. So it's actually one I would look to get involved in if, if you see continued Kiwi strength and this kind of fizzles down here or ahead of that low day close, might be a decent entry for a rebound. And by the way, before this low, guys, there was what? I looked at this earlier in the year. I think it was like 10 days. Yeah, 11 days, consecutive down days. We haven't seen that stretch in, man, I was looking, it's been like 7 or 8 years. Right here. Okay, that one registered right 11 days down also. So what happened in that instance? You saw near-term recovery. We did register a new low after that, right here. right? Got a little bit of recovery, but we registered a new low before resumption. So my whole premise of this thing is, again, watch out near term. You might get a little bit of kind of a setback recovery here. Doesn't mean all is said and done. A pivot below this is what's needed to mark resumption, and then you're looking for like a drop into 62.30s. Former swing highs from 2017 and the 50% retracement of the 2017 advance. So we'll be updating you on this if we do get some clarity near-term price action, but I just wanted to highlight that critical pivot in price is what we're focused on here. All right, and that's number 11. Any questions beyond that, guys? Let me know if we have a couple of minutes left here. If there are any other trade setups you want to review. Just a quick note on crude, which is something that we've been looking at. You know, we talked about this yesterday in the webinar. If we were to rally back above the opening range lows for the year, for that February decline, essentially put us back in the confines of that slope. Looks like we're failing here. So 2017 opening range high, 2017 open, both your next downside targets if this thing drops 55, 53, 80. Still deep in oversold territory. We cannot fight it beyond this, okay? Nothing to do here. If you're holding shorts, again, anything beyond 60, I think you just put the stop above 58. And your limits, again, 55, I would still take some off. It's really 53.80. Last year's open is a pretty decent pivot in price. Looking at there. What's the webinar schedule like this week? So Ty, I think this might be the only one that we're doing from the intraday this week. Obviously, Thursday is going to be Thanksgiving. So guys, the markets are going to be pretty quiet heading into Wednesday's close. U.S. markets have a half day on Friday, so I wouldn't get too aggressive there. But Jamie will be on board tomorrow with the midweek strategy webinar, as all is planned. If I do a webinar on Wednesday, I'll give you guys a note here on Daily FX, but typically heading into those weekend or extended holiday breaks, Ty, I don't take any new positioning. So I really don't want to get involved and kind of get excited about anything new right ahead of a thin liquidity holiday weekend. But definitely Jamie's on board tomorrow. Support for Aussie Kiwi, 1055. So for Aussie Kiwi, yeah, man, this thing's breaking here. If it closes below this today, I have a real problem with it. Okay, Peter. So let's write that down. Aussie Kiwi is number 11. So here's the thing with Aussie Kiwi. If you take this thing just on its own, just objective slope analysis, forget everything anyone says. I'm gonna remove this just for the sake of clarity. Basic trendline support. 1 touch, 2 touch, 3 touch, 4th touch, 5th. Really? Momentum. That's below 40. Yeah, and this is what my whole point was. Aussie losses outpacing Kiwi losses, Kiwi gains outpacing Aussie gains. It's been kind of a one-stop slingshot to the downside here. But this is slope support. This is slope support, Peter. So I certainly can't advocate shorts here. At the same time, it's been sort of catching a falling knife, trying to catch this. Let's see if there's any levels of interest. Nope. Nope. No, it's probably like a 786 retracement or something. Oh, I already had that on there. Yeah, I wouldn't even get 105.50. What are you looking at for 105.50 there, Peter? I don't have anything down there. Basically, if we break this slope, you're kind of looking for the low. Now, okay, you're looking for the low day close. Gotcha. You didn't type that, but I just eyed it out. So I'm assuming that's what you're looking at. Low day close for the year. All right, this is a low week close, excuse me. Intra-week on a spill down there, Peter? Sure. On a spike. As it stands right now, we're testing support, man. We're testing support. No ifs, ands, or buts about it. Damn, there's nothing that lines up there besides that trend line. I put this in the same box or category as Euro Kiwi, right? In that it's coming into a big level for near term. All we should be focused on is looking for constructive price action. So divergence in momentum. Something to put us in here. Here's the near-term picture. Basic channel off the highs is what I'm working with here. This is from the highs that we made in October. This is from the swing low that we made in late September. 1 touch, 2 touch, 3 touch. Remember the low that we just registered there on the daily charts for uptrend support. So basically, yeah, I mean, this kind of low would need to hold right here. Way too premature for this. Way too premature for this, guys, but something to look at if that low that we just registered holds. Near-term resistance. That's the breakout target if we clear the weekly opening range highs, which is right at the median line. That's kind of your breakout level there. All things held constant, you know, you're still at risk for a slide lower below 106.60, but two levels of interest, especially this, if we get through it, objective, again, that's objectively the opening range highs for the weeks. Peter, does that make sense? That's Aussie Kiwi. Big level. And again, this could be the washout. It's just, you know, I always tell you guys, I can't get excited about trying to fade a reversal as long as the daily chart is deep into oversold territory like that. That's not, you know, that's not good. Typically, that's the sharpest part of the losses. Again, don't take my word for it. Look in price. Every time momentum on a daily basis is below 30, you know, typically you see these long wicked candles, and I don't want to get, you know, too aggressive on it. If this low holds, like I said, if the break it back about 106, really 106.60, but 106.35 would be a nice start to tell us that there's some, you know, form of exhaustion here. But based on Aussie and Kiwi performance in and of themselves against the dollar, you know, Kiwi has just been the better performer overall. So I'll shelf this one with Euro Kiwi as both coming to major levels of inflection that we'll be looking at this week. All right. Any other questions? If not, we'll go ahead and wrap it up here, heading into 9:30 hour. So, guys, again, happy Thanksgiving to any of you who are celebrating this week. Again, I'll keep you updated if we do pull out a Wednesday webinar. I really doubt it, unless there's something really pressing in price action, guys. A good time to really just kind of lower your positioning. Thin liquidity starts to come into focus as you get towards Wednesday night. So just make sure that you're being very cognizant of that market condition at this point. And we will keep you updated on SB Squawk if anything. All right. Same to you, E-Man. Thank you so much. Kelly, Marco, same to yourselves, guys. Have a great Thanksgiving in case I don't talk to you. And I will see you later. Cheers.